Okay, guys, welcome back. And today is July 2nd and 2021. And before the stock market open, I want to discuss a little bit about the US economic data. So today, the US non-pay payroll data has been released. Okay, so let's take a look. So U.S. economy has added $850,000 job as hiring gain pace. So June data shows sign of progress in labor market recovery, although unemployment rises to up to 5.9%. So actually, this is a really positive, data, and here as you can see, this is yeah, so this is the expectation is around 720,000 jobs created, but it's actually like um up to 850,000 jobs. Despite a large monthly increase, the unemployment rate ticked up to 5.9% from 5.8% a month before. So explaining for this difference, it is really normal because the unemployment rate is equal to the number of unemployed people who in the working like in a working pool. So the working pool count only those who want to seek a job. So this means like more people want to seek a job, so a lot of jobs were added, but still more people want to join the market, join the labor market is increasing. So that's explained for why the unemployment rate reduced while the the employment employment data, the job data is better. Okay, so easing lockdown can help the U.S. economy quite a lot in a lot of industry. So here you can see, as of for now, the major stock market average pick up where they left off and move higher to begin the second half of the year. Earlier today, I'm sorry for the delay in this. So earlier today, okay. So earlier today, Japanese market and most of Asian market has shown a mixed result. However, in general, it show an uptrend, while the European market show a very positive. The futures also point, the stock future are pointing to I'm sorry for the delay. Okay, so are pointing to a modestly higher opening following a better than expected government employment report. Yeah, so please, sorry, stay tuned a little bit. Yeah, so basically, it's loading quite long in the recording. Okay. So as the stock future are pointing to a quite high level, we can expect that the index, the US index in general, can point higher. However, considering a really big uptrend yesterday, it's gained quite a lot, to be honest. Like I remember 0.2%, 0.3% yesterday, which is really high. So in the capital market, there's a thing called like a lot of usually the day of the positive news release, there's gonna be like not as much gain as the day before because all of the data released before have already shown a really positive, as you can see here, a really positive result. So like they piling up on capital buying in the um, indexes and according to the expectations, and so like it's piling up like that, it has increased the day before, not the day that the news is released. I think it's gonna be the same case for today. It's like as of for now, it show a very really like high uptrend. I think like a lot of hedge funds, big bankers has piling up on their capital in this kind of um, asset index. So it's no surprise that it has increased like this, but I still expect to see some correction. As for tomorrow, we don't know. We don't know. So tomorrow, I think I'm gonna have tomorrow or on Sunday. I'm gonna have a recap for today's market. So you can see here, it's actually a really huge uptrend. Okay, I'm sorry, I need to adjust a little bit. So to hourly data, so we see a really positive uptrend right now, 1 hour. So this is no surprise at all because the data show very positive result for the US market. The Nasdaq also like point really high right now, even though the market hasn't been open yet. The US 30 also really positive. The Russell and Russell 2000 and the Russell 2000 3000 also really positive. So today is definitely a green day before a 3-day holiday weekend for the US, the president's the Independence Day. I'm sorry. Okay, so as this is a very strong kind of strong pickup for the second half of the year. Okay, so investor with this kind of economic situation, like investor are now looking for upcoming earnings season to provide the next, kind of leg up for stock. So corporate profit should come in a very strong overall, given the notable bounce back on the way as businesses get back to normal with the pandemic winding down. There's still concern about the supply disruption. However, like it's with the company that the main market only based in America or the Europe, it's not going to be that bad. But only the companies that that have production depend on China or in Asia is can be affected. And also if they have like the main market is in other country, international cooperation. As usual, though, there's an uncertainty as to whether these good news has been priced into the market yet. So, so it is really normal because, as I already explained previously, so we don't know if it has been priced or not. Maybe like the capital has been already piling up yesterday, like because so many good news, and it's certainly that today is gonna be a good news too. And the S&P 500 set an all-time closing high on Thursday, and the Nasdaq up like 18 point, and the Dow Jones Industry Average up 131 on near their peaks yesterday for Thursday. So okay, so let's look at certain sectors of the economy. Certain sector of the economy. I'm sorry, this chart doesn't show it, but as we can rely on the current market data and the current policy, like restriction lift, industry like airline, leisure, hospitalities gonna return to normal. Travel in the United States is set to ramp up in a big way over this 4th of July holiday weekend. Vacation trip and visit to friends, relative are back to the to-do list. And okay, so to-do list, but international travel may take longer to come back owing to lingering concern over the virus variant, as well as the unwillingness to get back to normal. Unwillingness to deal with any restriction that may remain in place. So look a little bit at the GDP. So the GDP also quite positive also. Stand to benefit as supply chain slow due to COVID catch up with booming demand that would likely mean more auto sales. Since vehicle manufacturing has been held back by chip shortages, but if like the kind of more like the supply chain got connected again, and actually the Chinese economies and the gain back is also a little bit quite good too, because their vaccine rollout is really fast. As far as I read just yesterday, I think like almost like half of the populations has been vaccinated. Um, the exact one time or two time I don't remember, but almost like I think 30% has been vaccinated 2 times. So it is really I'm gonna check it back later and get back to you. So okay, so meanwhile the housing market is being supported. Low mortgage rate. This is come as no surprise. You can see here the US 30 years, so the US 10 year and 30 years usually signal help us to predict the mortgage rate. So as it slow down, it's go really low like this. It seems like the mortgage rate gonna be lower as the average rate for the 30-year loan recently dipped back, and an increase in cash deal in some market point to healthy demand too. Although sales may be held back somewhat by supply constraint for in construction industry. Meanwhile, okay, so in short, it seems to be like a path toward a sustained economic expansion and a rise in corporate profit that could push stock higher. But Wall Street remain worried about whether or not the recent spike in inflation will fade away and how soon the Federal Reserve will tap the brake on its expensive monetary policies. Let's have from fact is seen as a negative. By the market. As for Fridays, like we should expect that there's gonna be some major correction. And not actually some major gain, but also because of the correction. So I think I predict it's gonna be just not as high as yesterday, but just right in the middle. Let's point a little bit to the Forex market. So the Japanese market today is quite positive. That's why there's reverse trend for the USD JPY market for today. So we can see all red. The USD got weaker. Yes, the USD got weaker, and other currency is normal because yesterday it reached the all-time high. Also let's look a little bit of the usually the yeah the yeah so the Fed fund rate also explain a little bit for the strength of the USD. So it's down like this. It's mean like the USD also as a health as a good health right now. So however, there's just a correction there, so no need to worry about it. And okay. Okay, so let's look a little bit at commodity. We're gonna expect it's gonna rise. Okay, so it's normal because when dollar down, commodity gonna rise, especially with gold. Hedging asset like gold, silver, metal asset. Oil gonna rise for sure because the economic really positive, economic lift and all those kind of things. Okay, so let's look a little bit of the. Okay, so here's the gas utility stock. Roughly kept pace with the broader market in the first half of the year. As you can see here, here's the gas here. It's also kept pace with the broader market. So an index of selected gas distribution rose nearly 11% in the first half of the year, trailing the S&P 500 14.4% year-to-date performance. The gas utilities index outperformed the broader market. Looking at the second quarter, the divergence occurred earlier with gas utility stock consistently underperforming the S&P 500 since mid-May and briefly trailing. Okay, so this why I mentioned this data. This is important because investor highlight the sector they focus on rotating into the inflation trade. So this side also highlight that we can, some fund manager can focus more on the reflation trade. So basically the reflation trade is a bet on asset that typically rise with an improving economy and inflation that has lately benefit energy, financial growth stock and companies like whose fortune are tied to the business cycles. So to the extent that value and cyclical were outperforming earlier in the quarter, utility didn't really benefit. Okay, I want to highlight this a little bit. Okay, so utility didn't really benefit. So, and to the extent that growth is now outperforming value stock over the last few weeks, again, it's not helping utility at all. And as already what I said yesterday, like as the market cap yesterday or the day before, the stable kind of stock is the most underperforming in all kind of sectors. Okay, so it means that we can be like there's a little fresh capital flowing into utilities and investors are largely light on exposure to the sector. Finally, the market focus on inflation present the ashy hill for utilities. So basically, this just looks like investors are also betting on inflation trade a lot. Actually, it does make sense also because it seems like the Fed wants keep the the Fed fund rate too high. Let's see. Let's take a look a little bit. One more time. Okay, where's the Fed fund rate? Okay, here. It seems like it doesn't increase much. So as the Fed fund rate doesn't increase much, we can still ensure that they're not going to increase interest rate anytime soon. I mean, at least for 1 or 2 months. So as of for now, some short term or investor arbitrageurs gonna bet more on the inflation trade. Only value kind of fund gonna focus on more. Even though now there's a lot of discussion about whether or not the value strategy still work in this kind of time because it's so mixed up and you need to be flexible with every situation. So basically, to sum up, I'm gonna say that in general, the market has recovered. We expect to see some correction for today before the bell rang. The bell ring. So, but still expect to not much uptrend as yesterday. So, index to increase like mid level, like maybe 10 points for S&P 500, and like maybe half or like 9 point for Nasdaq. It's not accurate. Also, like so, it's gonna be between 8 to 10 points. So and also major currency pair because other economy pick up and also the correction from yesterday is expected to have some kind of pullback and the long term and also we can expect some like in the in the short term we can expect replacement trade at least for the next 1 to 3 months because the Fed yesterday has like came everybody down like we're not going to increase like the Fed fund rate that make the 10-year 30-year interest rate higher for corporation. So yeah, so we expect to see some kind of deposit from certificate of deposit gonna transit to more like mortgage sectors or other kind of growth sectors. So let's just enjoy the game for today. And I hope that you guys can have a really wonderful like Independence Day for the US. And I promise like I'm gonna do one videos for like the week recap for weekly recap at the on tomorrow or on Sunday. And also I'm gonna do 1 or 2 video about kind of currency pair kind of valuation short term and long term on this weekend. For next week, I promise at the end of next week, I gonna publish the conservative portfolio. So remember, it's gonna be more like conservative portfolio, and also do more kind of stock analysis. So I gonna try to kind of in like my future video, I gonna try to do some more like backtest strategy and review like what strategy works, those kind of things. As of for now, I can promise that within 1 or 2 weeks, I'm gonna done with the currency pair analysis videos. gonna inform you more like how to, you know, for the currency pair, how to like evaluate long-term and short-term evaluation pair, and how to set your expectation. Yeah, so but later on, I really promise at the end of this month I'm gonna do more like backtesting strategy. I have already have around 30 strategy available, but I need to kind of um do more backtesting a little bit more, and so you are more like data. So I'm gonna review 2 or 3 of my strategy because not all gonna work, you know. So okay, so that's it. I really hope that you have a wonderful trading day and have a nice weekend. So see you guys in the next video for the weekend. Bye bye.